Good day, everybody. It's Greg Schnell, and I am here with the June 8th market roundup. Thanks for taking the time to join me. Lots going on in the market this week. After a low on Monday, a big rally for 4 days, and basically, the Fed said they'd do everything they can, and so that seemed to get the market excited. Breadth was near bounce levels last week, and they definitely bounced. We're going to cover that off quite thoroughly today. The New York Composite actually looks like the advanced decline might break out to a new high, so that's just bullish. Hammer candle on oil, so perhaps with the US dollar looking like it's going to break down, perhaps the hammer candle on oil is going to play out. So that would be definitely something worth watching. Could be some big moves there. Currencies, big trend lines being tested. So with the yen, the euro, and the Canadian dollar all showing some promise here, that looks like an important setup for us, maybe a macro backdrop into emerging markets. But I still have all kinds of market topping indicators that were in place, so I'm still very concerned that this is just a false rally. Anyway, I think you have to take the signals as we get them, and so stocks like Apple gave us a signal on this week, and so there's lots more to look at there. But I think, yeah, my bearish opinion has to change if we get the changing data, and I'll show you the advanced decline line data and net new highs for the New York Composite, and both of those were very bullish. So. Okay, let's get into it. So first of all, we're going to start with the advanced decline line. So the Nasdaq really didn't bounce much here. This is not a very steep bounce, and you can see this pullback here. One of the things we've been worried about was this divergence between the September high and the May high in the market, and you can see that price was higher, but this was a lot more divergent. Now, if we unwind this tape for whatever 10 years, just to give you some ideas, um, we have some situations where, like 2015, where we had a lot lower high, and then it basically tried to rally, but it was a sideways rally and then rolled over. So this was actually when the U.S. market topped in here, and the Nasdaq Composite went on a little bit higher. But you can see this big divergence. And back in 2011 and 2012, we had a lot of negative divergence, and the market didn't do much after. But it's hard here because this was QE. This was basically QE was introduced, and the market just went on a raging bull market ride. So that's very unsettling, because that's one of the problems we're sitting here experiencing right now. So with that, the NASDAQ still says to be cautious in terms of net new highs for the NASDAQ. So that's highs minus lows, so 52-week highs minus 52-week lows, we're at 0. So that isn't that bullish, or 14 here, but not great, right? Just kind of poor. So now we go to the New York Composite, though, and look at the advanced decline line here. It's almost hitting new highs, which, for all intents and purposes, it did hit new highs. I mean, after 4 days to rally all the way back up and be within whatever, a couple of days of taking out that prior high, that's very bullish. We had a downtrend on the using a moving average, and that got snapped. And when we go back and just look at price again here, so we had this big trend line in place. We briefly broke above it. We're at that trend line. Now we could move this trend line up to that peak, whatever. But the bottom line is this snap here was pretty important. And that was, again, within 4 days. So that's very bullish. And then we had the same move, a really powerful move in the New York Composite. And it was bouncing off previous support, right? This level here was pretty major support through early 2018. So far this week, I mean, that move right there was significant. Now, we did see that kind of move in both October and November after the market had pulled back for the month of October. So, are we just the beginning of the month and the 8th is kind of the end of that rally? That would be about the only thing that would kind of throw a little bit of doubt into it. But here's the net new highs, and what you see here is, for the first time since January of 2018, we shot well above this 100 or 150 level. This is very bullish. And so looking back here in 2016, that's the kind of change we were waiting for. And so if this higher low is going to be it, right? So we had a low down here and now this red low up here, these higher lows, if that's it, then you want to be bullish and you want to be on the wagon going long. And so having the advanced decline line almost break out to a high, and this is a very bullish sign here for me. So one that I do not want to ignore. That's the first time we've seen it in a long time. And hopefully I don't think 4 days after the market corrects is being too late to call it, but that looks really very bullish to me, and we finally get that. And that's the kind of thing that if we had lots of stocks participating in a new bull market that we'd want to see. So again, that's very, 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 very bullish. Here's the Canadian market, and we're still under this trend line. The moving averages of the advanced decline are still below zero. And we've got this downslope, so no real break in the trend line. And so the NASDAQ not breaking and the Canadian market not breaking yet makes it a little uncomfortable. You kind of want at least these trend lines to get broken on those two, but that hasn't happened. So, but clearly the New York Composite, that one looks a lot more bullish. And so let's just stay with that and be focused on that, because that's pretty meaningful. Now, the Canadian market for net new highs is still stuck below this 50 level. It got up to 18, so that's not exactly a rocking bullish move. But if it was going to rock, then we'd really like that. And this is the Alexander Elder U.S. high-low over the last 5 days, and it's switched to positive. So that's just very bullish. And again, when it's positive, you want to be positive. So that's a really strong sign coming off this low. And the fact that it didn't get very weak, like it didn't do the October dip, it held in there pretty firm. And what you can see is that in these uptrends here, this is a better sign. So unless it immediately dips back to negative, I think you want to assume it's this sort of thing and breaking back out to new highs. So that, to me, those two things look very bullish and definitely put a lot of pressure on the bearish view. The McClellan oscillator has moved above zero for really the first time since mid-April, and so that was a really bullish outcome here this week. And again, when that's above zero, that's definitely helpful. And the summation index up here at the top, we talked about it last week, that there are some examples of it bouncing around this 200 level, but we hadn't seen any action like that yet. Well, so far it's hardly a big bounce, but at least it stopped the downslide. And again, if we're going to break through this trend on the New York Composite, I think that's pretty bullish. So okay, for the summation index, just looking at the big picture here, we paused at 200 on the New York, and again, that's usually a bull market trade. We're not into any sort of big bear market trade here, but this was the one that was so deep before, and the question would be, if we couldn't rally out of here, was this just going to be a false break? And so what we saw back in 2009 was we came off a deep low, rallied way up, and then we pulled back and we got to 400 and bounced. Well, in this case, we got to 200. If this is where the bounce is, that would be a pretty bullish location to get on board. And even, we're at 12,765 or whatever. If this gets through 13,000, I think we're looking at some sort of a head and shoulders base here and breaking out to new highs. So yeah, that would be a quick switch. And again, the change in the US dollar, I think, could be a big clue on that. So we're going to get into that in just a second. The NASDAQ summation index minus 200 is still, the New York Composite has to be up around 400, and the NASDAQ, this minus 200, minus 400 is very bull market indicative, so nothing new here. This could easily be a big change. So again, very bullish. Here's the NASDAQ composite on the breadth index. Nothing changed from last week to this week in terms of the bullish percent index. And again, you have to go all the way from being on a sell signal to being on a buy signal. So that's a big swing that they have to make. Whereas the percentage of stocks above the 200-day moving average just has to cross a line in the sand to a single thin point. Whereas the bullish percent index could have to move 5 or 10% to go from one extreme to the other. Anyway, in this case, we were down at 34.5% last week and we're up at 39%. So clearly this got bullish, but the big indexes with the large caps, they really moved. Like here's the NASDAQ 100 and it was minus 56 to 66, so it's up 10%. But just again, looking where it bounced at here, let's put the horizontal line back at 56 and why we were so worried last week. And the reason is because it rarely, once it breaks below this level, this 56 level, there's, pretty much deep valleys below that. So we were, it was clearly living on the edge as we wrapped up last week, and then Monday started even lower, so it pressed down a bit. But now we've bounced up and we're at 66. I still want to see this get up to 70 or so, and I want to see the bullish percent index really start to trigger. But again, we got some very bullish signs off that New York composite, and so don't want to stay too negative on that too long. If things are going to rally, get on the train. And again, the Fed said they're going to do everything they can. There's people that think they're actually going to cut in 2 weeks, whereas, 2 weeks ago they thought it was going to be September. So one jobs report and everybody thinks they're going to cut. I think the bigger risk will be if they don't cut on June 14th or 15th, whenever that Fed meeting is. We could go look, but it's coming up in a couple of weeks. And so as that happens, I think we want to be focused. I think it's the week of the 17th or 18th, somewhere in there. Anyway, here we are at 54% on the New York composite. That's bullish after being down at 43%. So more than half the stocks are above their 200-day moving average. That was a very sharp reversal. And we only have 48% of the stocks on a buy signal. But again, this bullish percent index is a lot harder to swing. Now, on the S&P 500, and I know I'm taking a little bit of time here on the breadth, but this is pretty important how quickly things have improved. So this was down at 50% last week and went to 63%. And again, that 50% line in the sand, let me just go get that for you. Just draw it in here as 50%. And sitting at that very low level, we can see that everything, again, breaking down from below that was pretty serious. And even my red arrows here said if you're breaking below 60, that's pretty major. So to see this big push down and bounce back up, pretty important place on it, and on the big index as well, the S&P. So looking at the Toronto Stock Exchange, no real action on the bullish percent index, no real change on the percentage of stocks above the 200-day moving average, but they were both at 57-ish before, 55, and up to 59. So they improved, but again, they're still kind of in the range they were, so no real change for the Canadian market. Okay, energy got a hammer signal. Now we still have some problems to work out. So here's crude, and again, it made a 4-day high. But the nice part was it made a big weekly hammer candle. I'll show that later on. But this is the kind of reversal we had back here in December, and that was a really nice breakout. And when oil followed that, that was a good program to be on. So watching the oil stocks closely, again, I keep thinking of them as an economic indicator, so if they were going to start to improve, that would help a lot. XLE looks like it's ready to break this downtrend. It's right at it, so important. XOP not near its downtrend yet, and the same thing with OIH. So really we'll be watching the global markets to see if they can start picking up and getting more enthusiastic, because again, I think that's what's dragging down the US is the global weakness. I'm going to just miss this one. For the bullish percent index on the gold stocks, we had gold break out to a new 52-week high this week, and didn't hold there, but it closed right near it. So that's one to watch for next week. The bullish percent index on the gold miners is at 40%. We want to see that break out. And again, I just want to go back and get that 2016 low. And this was the only time this got above 50%. So let's just put a red line there. Here's 50%. And uh, we want to get above that level, and that would be much more bullish. So the stock market or the gold market's been range bound since then, and if this can start to improve, that's a big deal. Now here's the gold miners, and they definitely shot above their 50-day moving average, so that's bullish. Gold was above its 50-day, the gold miners moved above its 50-day, and the ratio moved above its 50-day. So as a package, everything went bullish this week. We'll watch to see that that gets maintained next week. Maybe I'll just save that red line version so that we can refer to it next week. Okay, and again, a weakening in the U.S. dollar would help gold, so that kind of fits. So here's the S&P 500, and definitely rallying off the 200-day moving average, spent 2 days below it and kicked up, so that's pretty bullish, and we thought there might be some resistance in around this 2850 level, because that's where we stalled over here a couple of times. Anyway, we went right through that, so now we're at this 2892, and then over above that we have 2954. So dramatic reversal here, and the Nasdaq had kind of made a head and shoulders top here, pulled below it, and then broke back out as the S&P did. So pretty interesting reversal from a technical perspective. Yeah, all the computers jumping on the trade below the 200-day moving average go long. Algo. So that was good. And here's the Fed meeting that we had in May. And again, we've got another meeting out here. I'll put it on the charts for next week, but I think it's around the 17th, 18th. And then that's also going to be options expiration week. So for the month, the S&P is back to unchanged, down 0.21. So that's from May 8th to June 8th. And for for year-to-date performance, we're still up 14% off that extreme December low, rallied back up, gave half of it back, and now we're trying to break back out to the upside. So that was a pretty firm move this week for sure. Okay, so big U.S. S&P outside bar here. That's got to be bullish. I mean, it was the biggest move. You look back here, we haven't had a thrust like that going back a long way. So if you're wondering why I'm making such a sudden reversal in opinion, it's mostly because the breadth indicators really show this as being a meaningful thrust across the board. The Russell was bouncing right off the dotted line level that's been on this chart for years. The NASDAQ just dipped below this support resistance level, and again, big outside bar this week, tested lower and closed higher and closed above the previous week's high. So lots going on there. S&P closed above the previous 2 weeks, and again, the Russell just was an inside bar or slightly lower low, but trying to make a reversal there. So the S&P rallying back to the prior kind of intermediate high we had in May, and we've now got a turned up signal on the PPO. I think the real, looking left here, you see this sort of dip that we had in 2018. We've had kind of a similar pullback now. Is this just going to go to the moon? And that's the way it feels like, right? Especially with the breadth breaking out on the high lows on the New York Composite. Okay, NASDAQ distribution days. Well, none at the end of this week, but we also just had average volume coming in on the buying here. So that's not negative. We're heading, having average volume is still okay. Nothing wrong with that. Looking at the NASDAQ weekly, again, PPO had rolled over. And now the question would be, are we going to make a higher low, or does this just keep waddling down? And this was just a 1 week super rally in the middle of a bear market. So New York Composite is back above the 10-month moving average after moving just below it last month. So this moving average is really getting worked out here. And, we haven't seen anything kind of like that. 1, 2, 3, 4, 5, 6, 7 months touching within kind of 15 months. So that's pretty major test here as we oscillate back and forth. Okay, looking at the Russell itself, I think I still don't like this underperformance on the Russell. It closed at very low underperformance, and typically that's been a sign of the market breaking down. So the fact that the Russell didn't rally is concerning. PPO weekly below zero. Now again, if it's going to turn and bounce right here, that's extremely bullish. So that's what we'd be watching for as a follow through this week. Canadian markets, just to take 1 minute on there, we've got on the daily chart here, PPO trying to turn up above its signal line. It is below zero. And again, you can see that we've had these dips below zero before. So if that's all this is very bullish, and we'd be in a big bullish uptrend. One of the things I had been mentioning was that the Canadian market hadn't really pulled back that much, and was still well above its 200-day moving average, unlike the S&P and the NASDAQ. So that was quite interesting to see it hold up. So I think this is potential changing of the US dollar, and all of a sudden these commodity countries started to look good. And I mentioned that at the month-end market review, was that for some reason Russia, Australia, Brazil all held up very, very well, and Canada had held up better than the US. So all of these commodities countries trying to set up here, and again, Russia went on to new 52-week highs this week. So pretty bullish stuff out of the commodity countries. Anyway, you can see the Canadian market there still made a lower low and a lower high, but again, if we're going to start to bounce, this would be it. And a monthly bounce right on this, or sorry, a weekly bounce right on this 50 level of the RSI, that would be bullish. That would be very bullish. And we did touch the 70, so perhaps we've created a new bull market in here, and we're off to the races. And this overlapping trade on the way lower was just working us down, and now we've reset the engines and can go higher. That would be nice to see. But this chart is the one chart that makes me more cautious. Let me just shrink it a little bit. So what I've done here is I posted the full stochastic, and typically how the market tops, and I covered this off in one of the prior videos, but what we saw here was this, when you go through and see where the market peaked and then the pullback, and again, this is 1 year periods in here, so this is a big deal. It was kind of either right on the right shoulder or a little farther over, and when we had this, this is the value arithmetic, the geometric index, and it's equalizing all of the stocks one for one, so not market cap weighted. And you can see that we struggled here at the 200-day moving average, or the 40-week, and rolled back down. And typically that right shoulder and a downslope has been pretty important for a long period of time. So for us to have this downplay in place for a year, failing back at the rally, just barely getting through it, we're making lower highs and lower lows, and until we start to make a higher high and a higher low here, that would be a bigger picture issue. We're below zero on this index. Typically that's an important place to just say you're in bear market territory. With lots of global weakness, perhaps the Fed can save the day, but I really think they would, if they cut mid-month. One of the things is that everybody will go, wow, the economy is really weak, and get more cautious. And if they don't cut midweek or mid-month, I think it's even bigger shock, saying the Fed's behind the curve again. So really going to be a tough one coming up here in a couple of weeks. Anyway, S&P, or the Shanghai index, made lower highs and lower lows, so that's not that bullish. Here's the Nikkei on the daily chart, and it rallied back up to the 21,000 level. I think it's 2,900. But RSI is still breaking down here. This is still not an uptrend. Everything is lower highs and lower lows, and this interim bounce here is a lower low than that high, and a lower high so far than this one. So this looks to me like, on a short-term basis, we're lower highs and lower lows, and on a long-term basis, we're definitely setting up with lower highs. So a low, lower high, a lower low, a lower high, and then it would be way down here. Don't know if we're going to get that, but just suggesting that, this chart doesn't look that bullish, and it needs to get above this 21,000 for long-term. But look at how weak the relative strength is. It's continuing to underperform. Okay, so here's the US dollar, and the big change on the US dollar, of course, this week was using closing lows. You can see that we closed well below any sort of a trend line here. And that difference is, all the other weeks we rallied back up above this trend line, not anymore. Here we broke down below, and so that's a pretty important place to be aware of. And that trend change, PPO turning down on the weekly chart, is very bullish for commodities. So the fact that commodities were holding up, perhaps we can start to buy those, and maybe it's the Vale and FCX and BHP and Rio and Tech Resources. If they were going to start to move, that would be great. Anyway, I have no flavor for that yet. That is not the kind of stuff I'm expecting to see on my charts, but if it starts to show up, I'm ready. So anyway, US dollar, again, we kept watching it at this 97.50 level. That's the red line here, and it just keeps testing and testing, and now broke down below. So we've broken the uptrend. This is the 200-day moving average for the US dollar on the dotted line here, sitting down around 96.21. We are at 96.60 or 96.50. So if we drop another half a penny, quarter of a penny, quarter of a dollar, we're going to be all the way down here. So it's not a quarter of a dollar. It's from 96.50 to 96.21. So that's 28 cents. So if it could move that much, then that would be a big move for us. And we'd want to focus on everything else starting to break out. And the US dollar hasn't been below the 200-day moving average since April. And again, 2017 was a very bullish year for the stock market, and you can see that the US dollar was declining through that period. So if that's what's about to start to happen, then that would get very bullish. Okay, and again, I'm still not convinced of that. We're in week one. Here was the uptrend, and this low here back in March this is a daily chart, but you can see that we broke that uptrend. We paused briefly at the 65 period moving average and then have fallen below it. So again, PPO is below zero on the daily chart. Typically that's pretty weak. Mentioned a couple weeks ago this important momentum spot, and we really broke right down through it. And since then we've seen gold take off to the upside, and now it looks like the hammer candle that we're going to get to on oil is setting up. Commodities that are at a 17-year trend line like copper. So if that was going to bounce here, and that's what should happen on a very long trend line, if it doesn't bounce, that would be a bigger deal. So we're watching all of those things closely, but again, we're starting to get buy signals, and so you have to take them as they come so that you're not late to the party. Anyway, we'll put our stops just below in case it's a fake out. Okay, US dollar on the UUP on the daily here, you could just see we're sitting right on this trend line. So does it bounce again and reverse everything I've just said? That's a great question. But here's the euro, and look at this nice move after an inside week last week. So again, last week we had this down bar, then an inside bar, and we tested lower and closed near the top of the bar. The week before we had tested lower and closed near the top of the bar. So starting to get what we call buying tails at the bottom here. And then this week, clearly a surge higher, and any way you draw this downtrend line, we've broken out of it. The PPO we haven't broken yet, but we did finally turn up here, so that's a big bullish push, and it would be the highest PPO level going back almost a year, right into June of last year. So highest PPO level just says momentum's definitely improving, and finally we're getting a breakout of this tight flat momentum. That would start to change a lot of the charts. Okay, so here we have the euro on a daily chart, and you can see the push higher was every day, just kept working its way up. Germany is sitting right on this 12,000 level again, just continues to oscillate near there. So that's support resistance line. If this starts to break out, yep, get bullish, and the PPO is back above zero for the euro on the daily. So just got to like that. Okay. The Swedish krona that we had identified was starting to make 4-week highs, and this week broke this year-and-a-half downtrend, very bullish. If we go back to the euro, what you see here is a year-and-a-half downtrend goes all the way back to here. So same sort of break, but this Swedish krona gave us some clues that things were starting to improve, as it had made 4-week highs here last week and then broke out, unlike the euro. Now the euro's broken out as well. Okay, so looking at the British pound, again, it was sitting on this major trend line. Last week it broke below. This week it's back above. So again, if we're going to find support here at this level and move higher, all of a sudden all of those bearish situations that we're setting up for the US dollar change. We're getting onto a big bull market. If that's the case, we just want to get long. So watching that very, very closely. Here is the Japanese yen, and you can see that it's pushing higher here as well. And it's got, what, 6-year trend line, 2013 to 2019. We have one intra-week up above it here, but we're trying to hold right above this trend line right now. And it was a pretty big push this week. PPO had also broken out of a 2-year trend line, so giving us some ideas that that was going to go. And this long-term uptrend in momentum was getting near zero, so we were getting to the finer points of detail as to how this was going to end up. I mean, this trend line would have been down a little lower, but still narrowing in on it and breaking out above zero here, I think is pretty important. It's been 4 weeks in a row that it's been climbing. So this momentum move taking us higher, if this is going to break out, and again, if gold starts to get above that 1350, 1380 level, that probably really adds to the yen move. They kind of support each other. Mentioned that before. Okay, so anyway, zoomed in here, this is 2006 to 2019, and this importance of this levels here, we got a 95 level up here that's also going to play an important role for the euro, or for the yen, so we need to watch that. But to me, it looks like all of these currencies have broken out, and it will be one heck of a quick whipsaw if we had all of these currencies move and then break back down again. So keep watching that. Canadian dollar, look at this. It's actually breaking above this trend line. And so that's right after it made new lows for the year and pushing up to the high side. Got a PPO positive cross here, and again, we had flat momentum for 4 months as it ground sideways, and here we go kicking out. So it's not over till it's over. We want a little bit more movement, but this would suggest higher, and that would suggest crude moving higher as well. Okay, let's go to the Aussie dollar. What we see on the Aussie was it had given us a fake downtrend here where it broke below support, got down to new 3-year lows or whatever, and then it's starting to move back higher. It still hasn't broken through this, well, it's broken through this tighter line, but excuse me, based on the close up here in early April, that high line has a little bit more work to do, and we don't have a positive cross yet on the PPO. So still watching that one closely. There's the daily chart, and again, if we ignore that mid-April bump, there's multiple touches here, so 1, 2, 3, 4, now 5 on this trend line. So it's a reasonable place to have the trend line. We have broken above it. Let's watch it go above the 65-day moving average, and if everything's going to start to move, that would be it. Here is the emerging market currencies, and the reason I want to show this chart is this one, you find copper kind of on it, and I wrote here back in May that we're sitting at a very interesting point on this chart, and it just had that vibe that something was going on, and PPO right at zero. If this is going to turn here, that's an emerging market bull, so we'd want to be long EEM, we'd want to be long foreign stocks, and we'd want that to start ripping to the upside, and so the materials place would be a great place to be, and maybe that's what gold's trying to tell us. So again, is it just more Fed easing? I don't have an answer to that, but the bond market still hasn't told us it's an all clear, so this is quite a wild week to have to get the data we got. Anyway, here we go. This is the emerging market currency ETF moving higher, and you can see the gold follows it pretty closely, or the gold miners follow it pretty closely. Let's just watch and see, but the gold miners are suggesting there's something going on here. LIBOR, this one keeps breaking down. This is kind of the price action last week was really pushing down, going below zero here on Pring's KST, and that goes back to 2015, and the PPO, same thing, breaking down below zero here. You saw that around 1st of May, and it didn't really let up this week. So interbank borrowing doesn't suggest anything yet. Okay, HYG. Trying to get a bullish bounce here off the 40-week moving average, and did so. It's coming up against the 50 or the 10-week moving average right above it, and you can see that it's rolled over here in momentum. Now, does it just make a lower high and drizzle down, and that's how this breaks down? Don't have the answer, but at this point, this move this week says risk on. Okay, the government treasuries continued to move higher, so that was no clue for us. And the ratio between the HYG and the IEF, and again, dividends removed, show a little bit of a bounce here. There's still a downtrend in momentum, and when that breaks, you want to get long. We haven't had that break yet, but even if this started to turn up here, that would be very bullish. So keep watching it. We were at a deeply oversold level, but you can see in 14 and 15, this thing just sat on the bottom. And quantitative easing ended at the end of 2014, and then we had the final high in the market in 2015 in the equity market, but this ratio is clearly falling away. So what we had noted here was that this ratio was falling away, and you had some rallies in here that kind of made you doubt your stuff. And it was at near prior lows. We have the same thing here where it's rallying near prior lows. So we'll keep watching. If this is just a fake out and all of a sudden we're going on this big rampage down here, that's a huge move coming. And so this will be a wild week for everybody. I still think gold and trades like that should work. But if the US dollar is actually going to crack here, that'd be very surprising. So LQD, corporate bonds, again surging to new highs, and on this chart, Paul Tudor Jones said that this is the place for trouble to show up, and what we mean by that is the corporate debt market is as heavily levered as ever, or significantly levered up more than usual with low interest rate costs. And so if that was going to change and we had higher interest rates coming, then that would put pressure on this corporate bond market. Okay, US 2-year just kept falling. This is a monthly chart, but it still pointed down even in early July here. And again, this had marked pretty close to the timing of the top of the S&P. We had one more test here. Now the question is, so is this data not valid? That's a great question. There was a big uptrend here that we were watching to see if it broke. Hasn't done that if you use the lower number, the lower peak. Okay, Tips is saying that gold is going higher. This other one here is crude oil, and it has not started to bounce yet. I would say the crude oil chart doesn't marry up as nicely as the gold does, so let me just make it opaque and take it out of the data pool. But what you see here is this big move really starting to accelerate higher, and so pretty good pattern of gold following this Tips ratio, and this thing heading up so high. Looks to me like gold wants to go. Now the real question is, does this chart break out to new highs, suggesting inflation? And that's why we get this commodity boom, all the commodity countries taking off to the upside. So again, watching to see what happens, but that would be important. Here's the TLT breaking above prior highs, and this is the unadjusted version, so the dividend taken out. But look at the volume we had on the selling this week, even though it's barely down. But we had big volume in TLT. So again, we mentioned that this was way up at the RSI 70 on a weekly chart. It doesn't stay up there very long. So we were definitely expecting a move back on the yields. The municipal bond fund is still pointed higher. It's way up in this top territory, and it spent 6 months up here in 2016 before it let go. Anyway, we'll keep watching to see here where this is going to go. But I think the bigger issue on all of this, again, is outside the U.S., but the pressure continues to be the bond market giving us a signal. Now, maybe the PPO gets all the way down here, bounces, and that changes our momentum trend and we go higher. And that would be from a very high low, like close to zero. And so that would be a real big trend change in the bonds, and we'd want to watch for that. Okay, the 10-year yield getting right down near 2% here. It's at 2.1, close enough. Bottom line is we're watching for support to kick in there. Okay, the 5-year still plummeting and closed on Friday, very, very weak. This is a daily chart, so it's not giving us the same clue that the stock market is. This 2-year trend line, again, tight fit along here, but you do have this 2016 push well outside of that. It just touches 20 times here, but the extreme is, somewhere down here. So not near the extremes yet, but definitely the main trend, we seem to be outside of that. And I wrote about this before, but the calm before the storm here is in 2006, 2007. This went pretty mellow. And then in 2018, 2019, this has been pretty mellow. And so as you start to kick up down here, this is kind of one of the things I've been watching for on the 2-year, the volatility to increase as well. Okay, spent a lot of time on the bonds here. Let's just quickly get down to the transports. So they're trying to rally off this horizontal support and resistance level, but really, do you want to own transports? This is a pretty ugly chart. Hard to make any money playing in that stuff when it's swinging that wildly. And then this was the weekly chart, and you can see that 10,000 level, pretty darn important on the chart. Full stochastic way down at 20. So a bounce here, potentially. Keep watching it. We're right at zero, so this is a very bullish place if this wants to start going. That same thing happened in 2016. Who knows? So after a deep pullback, rallying back up, right at zero, a fail, and then turn around and bounce, that's just a bullish change, and we'd want to watch for that. So next couple of weeks are pretty important. The airlines continue their sideways trend up this week after down 3 weeks in a row, 4 weeks in a row. One thing we're watching for here is if this long-term trend in momentum starts to change and actually pushes to the upside. Railroads. They had broke this, I'll call it uptrend and a bit of a wedge here, but this downward move to horizontal support and bouncing off that's just technically bullish. Everything that you'd want to see happen is happening, trying to bounce off this zero level here. So still looks pretty good, and the big uptrend is being maintained. And I have mentioned it many times, the railways are one of the strongest setups. So if the railway chart starts to break, that's when I'd really worry, and we haven't seen that. So that would kind of be confirmation of the whole global slowdown in trade. PPO had rolled over at zero here, and I've mentioned that this next high has the potential to be a final high. So if this is going to roll over, and again, do you just get a little kind of relief rally and it rolls back down? That would be a question. But a bounce near this 50 level, that's usually very bullish. That's kind of what you want to see in a big uptrend. These dips at 50, well, it might not be smooth in there. It still suggests the uptrend. So keep watching. Trucking, that was pretty ugly, continues to be ugly. Landstar reported this week with bad data, but trying to hold this, call it 700 level. It looks like 750 is the support level to me. So do we go up and bang our heads here? Good question. Don't have the answer yet. Autos bounced big this week. We're not going to have time to get into all the autos, but there's some good looking charts in there. Ford looks good. Toyota Motor looks good. I'm not so comfortable with our good friends at Tesla. But watching those charts closely, some of them actually look like they could be buying setups. It would be very difficult. The Canadian auto charts like Magna and Martin Ray are testing, long-term support levels, 3-year and 5-year. So if they bounce there, that's what you'd expect. If they don't bounce there, obviously that suggests really big problems. Broker-dealer index had broken our uptrend here, so technically, nice whipsaw, breaks down, turns around next week, and we have an outside bar where we test lower, close higher, get back above the 40-week moving average. trying to bounce at zero here. That's a very bullish place on the chart if it was going to bounce. So after all of the bearishness we had, this was quite a week in terms of reversals on some pretty key indexes and industry groups. Utilities holding up here, but again, they've been very overbought. You can see we're right at the top of the trend line here on the PPO. So if even if they just pulled back for a while, that would not be a surprise. But again, everybody in the hunt for yield is hanging out in those dividend names. Here is the XLI, the industrials, after breaking below the 200 or the 40-week moving average last week, rallying back up and right at the 10-week coming up here. And you can see back here that was resistance after coming off it and below it. Was resistance, so we got that coming up this week. We'll see what happens here. Uptrend and momentum is broken, but we are trying to turn up here. PPO, at least the histogram has improved, so the downward momentum has obviously stalled. The question is now, do we have a brief wave and then roll back over, or do we start our new uptrend here? So pretty important week coming up. And if you got some buy signals showing up, I think you want to take them. The semiconductor index was up 1.1% on Friday. And if you look at the chart here, one of the things that's happening, you got an oversold condition. So first of all, that's a bit bearish because the semis don't usually get down here except in very bearish market environments. We're down here, but we're trying to bounce off the 40-week moving average, and we can see a lot of resistance here. Call it 1440. Let's just draw that on there. And style, solid, color, blue. And just to pick a level, so we've got a little bit of room to go here. It's up around the 10-week moving average, but getting through that 2018 resistance. So this looks like a breakout, a pullback, bouncing off the 40-week moving average would suggest going a lot higher from here. This is a pretty wild swing. Like in 2016-17, we didn't get this sort of massive move down in momentum. The histogram bulging here for 3 weeks. When was the first time? There was 2 weeks in there, I guess 4 or 5 weeks here, but that was after it had gone flat for almost 6 months. So to go from straight up to down so hard, definitely the volatility at play here. So keep watching that. Anyway, more on that as we go forward. I think we want to keep watching to see what the semis are going to do, but they were up 6% this week while the indexes were up 3%, so it was a pretty solid week for them. Okay, so Australia, and I mentioned this earlier a couple of months ago, is that the commodity countries are starting to bounce here. This is a big move, and wondering if it was starting to signal a new commodity bull market. So if the US dollar was going to top here, then that could be setting up in play. We don't have it on the Canadian market as much yet, so keep watching that. Okay, commodities still down on the month, lower than last week, or lower than May month end, so that's a problem. This is outside the Bollingers. Everything's pretty ugly here. We made a low. Could we be making a higher low here? That would obviously be bullish, but continuing the trend of down and ugly is hard to bet on bullish. This is the DBC, and what we see here is, after the pullback, it got back to kind of where it closed last week, so we're in the range of just a hammer candle on that if I switched it to a weekly. So you see a nice testing low, came back up, and that hammer candle is kind of thing we like to see after a big breakdown. It was a doji back in December the week before, and then we took out the prior week's high. So if we get above this week's high, I think you want to be long commodities at least until proven wrong. Okay, oil stalled its downtrend, let's say that. Nat gas broke to new 3-year lows, so nothing bullish there. And then here's heating oil. That chart's pointed straight down. So is gasoline, so no real improvement. Corn gave up a little bit of its gains. Soybean stayed below its trend line, back at its 10-week moving average, and wheat just was flat. Gold breaking out above the 2019 highs and made new 52-week highs. Didn't close there, but got very close to it. So that's on a weekly closing basis, it did make new highs, but on an intraday, didn't close above the highest high in that period. Silver back above its 10-week for the first time since February, and again, that was a nice place to get part of the rally in gold here. So when both are confirming, that's a nice move. I expect more upside there. Okay, here's copper breaking below its 2-year trend line. It didn't have an up week. It was still pointed down. Here's aluminum still pointed down. It was sideways for the week. Looking at livestock breaking that upward trend line. Sugar kind of stuck in its downtrend. Same thing with coffee, pulled back a little bit this week after a short covering rally last week. Cocoa breaking out to the upside. Nice. Not seeing that on cotton going the other way. New 3-year lows or 2.5-year lows. Marijuana names ticked up slightly, up 1% on the week. Trying to bounce near zero here. There were some good setups on some of the charts, but yeah, we'll watch to see which way that wants to go. Coal and steel. Steel had an inside week. Can't see it on this chart. I'll show it to you in a bit. But the coal ETF turned up. The steel ETF turned up. So those are nice. Lithium still well below its 10-week, and the rare earth metals, even with all the talk around China, still below its 10-week. Okay, not going to have time for the commodity indexes. Let's get into XLE. This chart tried to rally all week, so that was good news. But again, we're in this big downtrend. We've seen these counter trend rallies before. Keep watching. It's volatile times out there. So here we'd have a higher low setting up on this refining index, and if this was about to bounce here and break that down sloping trend line, that would be bullish. Here's frac, and it has rolled over onto a sell signal, and it had a doji for a week. So maybe these energy names are going to start to improve. Frac sideways. The one thing, notice this big spike in volume on frac here, and that volume spike in here was pretty much near the highs. This volume spike here was on the lows. So there's some pretty good traders coming in with volume here, buying the highs and selling, or buying the lows and selling the highs. Anyway, this one was the volume on the weekly, or on this chart here, looks so small, but somebody was showing up there to buy for a change, when you consider that the average volume on that is 16 and it sold double that. So at least some attention being paid to the unconventional oils with that hammer candle. So here's West Texas crude trying to hold on the bounce above 50. That's probably a good reason to expect at least somewhat of a bounce. Now the question is, can it actually start going up? Here's the hammer candle I spoke of on crude. We tested lower and closed higher than last week. Really nice. We're right at the zero level. So if this was going to be a bounce and we're heading up north out of here, that would be great. Love that. Would like to see a big push. And again, global, the long-term prognosis for oil is we're going to need a lot more. And so if OPEC controls production, then what we have is a situation where oil supply remains tight. We don't have that just yet, but a bounce here might suggest things are going to start improving, and maybe that's the US dollar breaking down and people moving into rest of world assets. West Texas crude, this is a daily look at it, but you can see this horizontal level at 59, pretty important. We stayed above it briefly. Now we're down here right at this 54 level. I didn't put in this dotted line. This was here from before. This chart looks a little busy, but let's make this line thick just for the purpose of discussion and open up the chart a little bit more. Okay, so you can see why this 50-54 level is pretty important going back on crude oil, and we'll just watch to see how we behave here. But a breakout back above that would be very bullish. A breakout not finding support there is obviously really big trouble for more global economy weakness. Okay, not too much to look at. Uranium tried to bounce this week. The one thing I would say is in this URA, there's things like Barrick Gold and stuff like that. So not necessarily a clean uranium mining issue. So with that change, I always want to look at Cameco. By the way, this first solar chart's looking pretty nice while we're here. But Cameco CCJ, um, let's just go to the last 5 years and zoom in on this. What you see here is it tried to make new 1 month highs and then pulled back and closed kind of in the range. But again, if materials were going to start to rally, perhaps this stock could do that too, sitting right on $10. And that would be the only way I think that we'd see a big breakout on this uranium, unless these other gold miners pull up this supposed uranium ETF. Okay, copper had a doji this week, so that was at least pausing. Full stochastic pausing in here. Some sort of an upturn would be nice. I think my next chart, yeah, shows this is the 12-year trend line, and it doesn't matter how you slice it. We're pretty close to dancing on that at 260. We closed at 262, 263, but we got right down to the 260 level. So when we talk about global weakness, I think if these trade wars don't solve themselves pretty soon, this is pretty hairy, and we've got a 254 level for horizontal support going back last couple of years. I think if that broke, that would be a big deal. Okay, let's just briefly talk about Rio and BHP. That chart's holding in, but full stow pointing down to the 50 level. Here's BHP trying to turn up on the full stochastic already, so that would be great. And again, this chart had broken out to new highs in April, so that was stunning to see with the weakness happening worldwide. And then Tech Resources, a Canadian miner, putting in new 3-week highs here. Very interesting location. Got a full stochastic buy signal, so that was nice. And then FCX, our copper and gold ETF or company, you can see it made new 3-week highs in here. So at least closing near the higher highs and lots of volume coming in on that buy. So from last week where it was dipping down, we had, call it 80 million shares. This week 120. So that's a nice change. And if we're setting up a higher low here, this is very bullish place. So we would have positive divergence on the weekly chart, and again drawing a trend line across here. Any sort of breakout on that you want to be a part of. So I would say go look at the big miners and see if there's anything there, and then watch for the US dollar to keep its trend in weakness going. Okay, this is the SLX, and one of the things here again was the inside week, suggesting maybe a turn. Look at the full stochastic starting to set up. So higher low on these momentum indicators, again, would be a big surprise to me, but if that's what they're going to do, I'm just going to buy the trade. So I like that setup. Gold. Let's get into it. Nice breakout here, and again we had this bar in here. We did make it above that. We go back to June of last year, May, June, and we're at new 52-week highs. So that's bullish. This trend line here breaking. Look at the volume coming in. That was the highest volume other than this is this is not an options expiration, but this volume here is clearly bullish. You know, everybody trying to buy into that trade. So that was nice to see. And then looking at the gold price on the daily here, just climbed up, and there was volume, positive volume hitting it every day. And as we test this 1349 high from February, that's an important place. We closed just below it, but any sort of a push above that, I think, gets a lot of people interested. And this is the 5-year chart. And you can see if this is going to start to break out here, pretty bullish interpretation as well. That 1360 levels friction, and then a break above that would be great. Now we do have the PPO turning up above zero, and this week we actually got the positive cross that we've been waiting for. Volume was excellent. Gap to start the week and finish near the highs. Full stochastic above zero, or above 50, so that's very bullish. Scooter ranking got above 90. Lots of things look like they're going here, and I think the big reason would be a change in the US dollar. Okay, this is one concerning chart. This is the GDX GLD downtrend in the miners outperforming the metal, and you can see we're pretty much right at that level. So if I just draw that line in, that would be a place to be concerned. So lots of Lots of cross currents here. I think the big move is the US dollar. And again, some positive news on Mexico Friday night, no new tariffs. So perhaps that could actually hold up. Thanks for taking the time to join me. That was a rapid rush through, but hopefully we got something there for you. Thanks, everybody. Bye.